What up, family? Welcome back to J Trading. It is Jupiter again. I am back with another video of the week. It is Monday today. Yes, so we are going to do what we usually do. As we have discussed last week, we'll be doing everyday analysis of boom and crash. And if you remember last time, I left one trade open, boom 1000. We analyzed the market. It was on red. If you remember, it was around negative $60. Each of these positions were minus $60, and right now, as you can see, it is popping. All right, since it was weekend, I didn't take new trades. I just kept on 1000 from last week. As you know, I don't take trades on the weekend, especially on Sunday. If on Saturday, if I see something special, some good analysis, some good setup, I might take a trade, but otherwise I keep my hands off the screen on weekends, because as you all know, weekends people will be chilling. Also, people will be away from the screen, so the pressure of the algorithm will be higher than the pressure of the traders. So you have to be in front of the screen whenever there are other traders in front of the screen. You should be with other people, not with the computer. So usually on the weekends it is the computer which is doing its thing, but from Monday to Friday, usually sometimes including Saturday, it is the pressure from the traders. So we will be trading with traders. That's what we do. So right now I'm sitting on 456 United States dollar profit. That's good, not bad. I took 1.5 lot size of 4 positions on boom 1000, and we talked about it last time. Let's see what happened. So this is a daily time frame. If you all remember, we were talking about liquidity sweep. There is some concept called a liquidity, where there is a lot of decision making, and it is a place where market makers will be shifting the market from up to down, or from down to up, because that area is usually traders where traders put stop loss and take profit. So as we discussed here, if we see this chart on 4-hour time frame, we have resistance here, right? Market was getting rejected multiple times here, as you can see. So that means this area is very crucial. People think this area will hold the market, so most of the traders will keep their stop loss just above the box. So we call this area what? A liquidity area. So this is where market makers will be grabbing liquidity. So that's why you have to focus. You have to wait for the market to move above the resistance always and sweep that area. There will be a lot of stop loss. Wait for the market until it kills all the stop loss, kicks out all the traders out of the market. After kicking out all the traders out of the market, that's when you look for entry. So we took first trade last week. I think it's the second video from last week. You can go back and watch it. Then I took profit around this area, and I waited for the market to go up a little bit, retest the resistance area, and I took another trade at this level. So as you can see on 4-hour time frame, it is going down. It is good, not bad. So I'll be taking my take profit at this area, I guess, most probably, but I want to see what the market is going to play out. I didn't put any take profit right now. I'll wait for the market. If there will be a big momentum, especially if the market goes below this level, this horizontal level, that would be good, because we can target this area right here, because as you can see here, there was a big momentum. So that means if market goes below this area, all right, this horizontal area, that means there is high chance that we might see a big fall down. So that's why I didn't put take profit, and I'm waiting for the market. So if you want to see the details, you can go down to 1-hour time frame. Market went up, killed all the traders, kicked out all the stop losses here. It came back down, broke the structure, went back to retest this area, and right now is pulling down from this level. This is what was happening exactly. And there is another important thing that happened on boom 300. As I told you, since it was weekend, I didn't take any trade. If you go to daily time frame, first thing you have to always do is go to higher time frame and identify important levels. So what I've seen here is, as you can see here, we have a big rejection, right? As you can see, we have a big wick right here. So this wick, remember, it is a daily time frame, so it is very important. It got rejected from this horizontal green line, and the candle went up and closed green. That means here at this level there was a lot of decision making. Market was going down. As you can see, the previous candle is a big red candle. That means the previous day was bearish, but on the next day the market was trying to continue as bearish, but bulls kicked in and pushed the market right up from this area. So that means this level is very important. All right, so if you go to lower time frame, maybe 4 hour, I guess, yeah. So if you go back to 4 hour time frame, what you can see here is, let me grab this. Yeah, so the first rejection is this one. Market bounced up from this level, so this level is very important. That's why I put that green line over there. And after this one, again the market came back and got rejected here. As you can see, there is a small bounce up, right? So that indicates this area is valid. The green line is valid support. So what you have to do next is, after identifying these 2 points, wait for the market to come back to that area. As you can see, it went down, right? So patiently wait. What you have to do is patiently wait for the market. You see, it came back to that green area. You're not going to take any trade at these levels unless you're scalping. Unless you're scalping, you're not going to take any trade at this level. But what you have to do is wait for the price to come back to this green area, green line. So let's zoom in. As we expected, the market came back to the green line. What does it mean? As I told you, whenever there is support and resistance, what you have to do is wait for the price to break that resistance and support. We are trading against what's this strategy? Breakout strategy. If you remember, like 1-2 years ago, we used to follow breakout strategy, right? But that strategy is right now not working with Deriv. A lot of times we lost money. That's why we quit trading for some time, if you remember last year. But right now, this strategy is working for me. It is making me, milk Deriv. A lot of times I have seen, believe me. So what you have to do is wait for the market to break above this. What was this line, the green line? If you go back, this area, you see it was a support, right? Since the price broke below this support area, right now this is a resistance. So what most traders expect is for the price to be rejected from this area, right? As soon as the price goes up to this area, most traders expect the price to go back down. So what they do is take a trade over there. Approximately near that area, traders will be taking sell positions there, and traders who bought at this area will be taking profit here. So that means this area is very important. The people who are selling at this level are going to put their stop loss at this area. You see, just above this green line, people will keep their stop loss, because this is 4 hour time frame, and like this area, let's go to 1 hour time frame. So if you go down to 1 hour time frame, what you see is it is a huge interval from that green line, from this support or resistance. The point where market reversed is very far. You see, most traders are not going to put their stop loss just above that line. They will be keeping stop loss from this to this area because it's not that far, right? If you keep your stop loss too far, that will be very risky. You're going to risk a lot of your assets. So what you do is keep your stop loss near the resistance. All right, that's what we do, right? Usually that's what traders do. Keep your stop loss just above resistance or just below the support. So in the opposite, what happens is market makers push the market above the resistance so that they can sweep all the stop losses just above this area. So the market kicks all these people with stop loss at this area, and what happens is market goes down. So before it goes down, we waited for the liquidity, right? We have seen the liquidity here. That's first confirmation. The second confirmation is draw a trend line in a lower time frame, maybe 1 hour or 30 minutes. So as you can see, this is a trend line, right? The market is bouncing up from this arrow here, 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 and 4th time here. So that means if price breaks below this area, that's called structure. the structure is getting broken here at this level. So as soon as the structure got broken over there, what you have to do is take a trade over there, because first thing, we have seen a liquidity sweep here just above the resistance. Second thing, we have seen the trend line or the structure get broken. If you want more confirmation, what you have to do is after the structure gets broken, all right, wait for the price to come back to a previous key area. What is the previous key area? This one is key area, but it's above the resistance and above the structure, so we're not going to take any trade over there, right? The other key area is here. You see this area, so draw a line over there like this. Market got bounced over there multiple times here, so that means this area is important. So draw a horizontal line, wait for the market to break the structure here. Price came back, broke this horizontal area and played a little bit. That's where you take a trade at this level. We could have taken a trade over there, but it was weakened and I was away from the screen, so we didn't. You see, all this could have been a profit, all this could have been money over there. Yeah, so this is how you make money, by using a liquidity strategy. Structure getting broken, what you have to do is just always wait for the market to go above the resistance or below the support, sweep all the stop losses, give it a time, be patient. When it breaks, when the price breaks the structure, wait for a key area, right? Take a trade over key area, then yeah, that's it, make money. That's it, there is nothing more. I think it's enough for today. Boom 500 played out as I predicted. If you remember, I drew these arrows from last video. It played out as I said. If you wanna watch what happened, if you wanna see what happened on Boom 500, you can go back to that previous video from last week and watch. This is what's exactly happening right now. But if there is any update, I'll come back and make a video. But yeah, I'll be back with another video actually every day, as I promised. Every day I'll be making new videos. So tomorrow most probably I'll make another video. If there are trades, I'll take trades and make a video. Otherwise I'll just do analysis and post a video. Yeah, so thanks for tuning in. If you are new, please consider subscribing. Take 1 to 2 seconds, okay? Subscribe to the channel, that will help us a lot. Otherwise just put thumbs up, and yeah, see you tomorrow. Bye.